If you are struggling to find market direction, then you came to the right place. As we all know, there are three main sessions in the market: London, Asia, and New York. And as we also know that the market is always seeking liquidity. And there are two types of liquidity: the internal liquidity and the external liquidity. In this video, I'm going to be focusing on the internal liquidity and how the sessions are interconnected together. This is what I mean by internal liquidity. I'm going to take EURUSD as an example, and we're going to try to find the direction of the market each and every session. Let's get into it. So first thing I want to do is identify for you guys what each line represents. This green line here, right here, is Asia open. This is New York close. This red one is London close. The orange one is New York Stock Exchange, and the green one is New York, and we have the blue one is London open. So for now, of course, you don't need to know them by heart. I'm gonna release an indicator and you're gonna copy everything from it, each session open and close. And in this video, I'm gonna show you how the price respects these lines and how we can know the market direction based on those lines right here. Okay, so let's start, and you will see along the video what I'm trying to share with you guys. This is something that I've been doing for 3 years, but I don't know if anyone else has been doing it or not. So anyway, let's start. So this is EURUSD 15 minutes chart. We're going to use one time frame only, but if you want, of course, you can use more, but for simplicity, we're going to leave it on one time frame only. As we can see here, we're going to use market structure and those sessions open and close. Okay, so now let's identify market structure. We can see that we are bullish because we broke the last high before the low, and so we expect the market to go higher. Forget about all this now. We're gonna go through it slowly. I don't want to complicate it. So the price is probably gonna go higher, and this is what happens. We go higher, and what do we leave behind? We leave behind this liquidity right here, which is Asia, the midnight, and we leave also London. But as we can see right here, London has already been retested. Okay, so price will probably not retrace back here, but in this case it retraces back to Asia and to midnight close. So I know it sounds complicated for now, but keep going with me and it's gonna get better. Okay, since we broke structure higher and we retested all those sessions right here, which is the internal liquidity that I'm talking about, now what we need to do is to follow the market structure, which is to go higher. Okay, after we took the internal structure right here, so the price goes higher, and what does it leave? This London right here and the Asia right here. This is the midnight close where we can see the power of 3, but we're not talking about that right now. We keep going higher. This is New York open, this is New York Stock Exchange, and usually the price, when it wants to retrace, we are retracing to those areas. This is the area and this is the other area. Okay, let's see if the price will retrace or not. Maybe you think that I'm doing this in hindsight, but I'm not. I'm actually doing it with you. I don't know if it's going to retrace to here or to here. Let's see together. As we can see, the price the sessions open next to each other, and when the sessions open next to each other, we usually see an expansion higher or lower, or it will consolidate, make a seek and destroy kind of conditions. We can know that based on what happened before, and because we left those sessions behind, which means the market will expand lower, in our case retrace lower, in order to retest those areas and then continue higher to the external liquidity objective. So this is the internal liquidity objective. Okay, so the price retraces, let's see exactly where we're talking, and then what does it do? Even if you think this is in hindsight, whatever, you can see that they are being respected so much. So now we see again the sessions open next to each other. We expanded higher. Okay, after what? After we took the internal liquidity, which is the New York sessions. But here New York did not open yet. This is London, Asia, and New York close midnight. So the price this is New York open, retraces back to the internal structure, internal liquidity. And if our objective higher is not yet, we didn't reach it yet, then we're probably gonna go back higher in order to reach it after we came back and took the liquidity from those sessions. So what's really happening here is what I want to explain. The markets are pushing higher to reach an external liquidity. Okay, but when it goes higher and the sessions open far apart from each other, they leave the internal liquidity, which is why the market pulls back and reach out for those liquidity and then goes higher. But in other cases, when we have the sessions open at the same time, they're probably accumulating for another move. So, and then when we want to see the market change direction, we're gonna accumulate next to each other and the market will retrace back down. I'm not sure if this is hard for you to understand right now, but I'm gonna be releasing a lot of videos about this topic, and the indicator, I'm gonna make it available in the next video. I'm currently working on making a better version. I'm gonna release it with all the timings and everything, so subscribe to the channel, put notifications on, and you're gonna get it hopefully on the next video. We can continue so we can see more examples. So this is London open, this is New York, and this is New York, and they open next to each other. Here we left Asia and midnight New York. Okay, so we were most probably gonna come back in order to get those areas. Okay, if we didn't, it doesn't matter right away, because later on we will come back for them. And one thing I want to note is it doesn't have to hit it directly. It can hit the order block, which is, let's say this was the last place, which is also the sell to buy, so it could come just right here. It doesn't have to come back and hit them exactly. Okay, so now we're gonna see what the price is gonna do. This is New York and this is the New York Stock Exchange, and we are going higher. And as you can see here, all the sessions open next to each other and we accumulate, okay, in order to go higher. And if we put our fib right here, we can see that it respects this area and it goes higher to this area. Okay, so we can also use the fib in that case in order to get targets and to get good entries. I'm not gonna do rules for a strategy right now, we will do it later on, but I'm just showing you what you could do knowing this information. Okay, so now since we left a lot of liquidity, which is the New York Stock Exchange and the New York right here, we might see a retracement. And just as you can see, probably this is news, but it came right to this area, which is the New York open. I can keep going and giving you examples because it's just gonna keep repeating itself. I've been doing it for 3 years and I see this happening every single day, every single week. And I didn't want to share it, but now I'm actually sharing it with you guys because I think you should benefit from that as well. So in this example, we can see that we have the sell to buy and the price retraces directly to this area right here. It didn't have to hit it, but it retraced to the sell to buy. Okay, and then we go higher. Let's see what's gonna happen next. This is the New York Exchange. So what happened here is that we went higher, we came back to all this area which is of the accumulated orders right here, and then we can go higher. So we need to basically remove all internal liquidity and then push higher. So all internal liquidity like here, right here, and then boom, push higher, and then come back, take all the internal liquidity, and then boom, push higher. And this is why we can see market structure in that way. Okay, this is how I see it. It doesn't mean that you have to see it the same way, but I'm showing you how I see it. We can continue and see more examples. So right here, this is London close, which for me is very important. Look at the sessions, they open next to each other, so we might see some probably expansion or retracement. So we can see here that we have market structure shift. Where to? It's either gonna come back here, so here, or it's gonna come back here. And now we are seeing market structure. Okay, we go, we come back here. Unless we remove the external liquidity, then we can change character, but we are sticking to one time frame for now. We're not gonna go through external liquidity, just this, because I think we need to focus on one thing at a time. And let's see what's the price gonna do. Is it gonna retrace back, or is it gonna keep going higher? And then again, we see that the sessions are opening next to each other. It comes back with this London close right here, and once again we can see that the sessions are open next to each other. So we can see an accumulation of orders right here, so we can expect a big move. Okay, so we can see that the price comes back. It doesn't have to hit it directly. This is the wick right here, and it hits the wick right away, which is the order block. And now we most probably, if we didn't take out the higher liquidity, the price will expand higher because we took the internal liquidity right here. Okay, and this is exactly what happens. Okay, so now if the market wants to retrace, it will come back to this area. So this is all accumulation of orders, and at the same time building liquidity right here. Okay, so as we can see, this is happening over and over again. For sure I didn't memorize this chart, so I hope you are trying to understand what I'm trying to actually show you right here. So as you can see, when we came to this area where we should retrace, the market just goes lower, which is okay. This is London. I don't know if it will be news or not, but we went to really, like, there was a lot of orders on it to break this area. So probably we are switching the trend right now, and we are becoming bearish. Okay, because we took out all this liquidity area. And if we want to retrace back, we can retrace either to this area right here, which is above the imbalance, or this area right here. This could be our liquidity, and this could be our area that we can take the trade from. Okay, so as we can see, we came back here. This is the open of the sessions, and then we can see the accumulation here of orders again. Okay, the price retraces back here. So I'm just playing it and show you what might happen, so you can actually also understand what could be the direction. And as we can see, the trend is switching right now because we are making lower lows as I expected. And tell me guys, what would you like me to share with you on the next video, because this is a very powerful tool that we can use. I've been using it for a while, and it's been helping me so much, market direction and making strategies and all this stuff. I hope you guys found value in this video. If you did, please like the video and subscribe to my channel. I would really appreciate it. And please let me know in the comments what would you like to see in the next video. I'm gonna be sharing more and more about this session opening, how we can, and how the sessions are connected, and how we can benefit from it. So if you have also any suggestions, you can let me know in the comments. And if you enjoyed this video, then you will definitely enjoy the videos I shared about the same strategy before, and you can find them right here.